Okay, my beautiful friends, it is me and you together again at last on this lovely, lovely Sunday. So, people, here's the situation. This is my newest segment of Marcus A Look Ahead, and I'm sitting here this morning again, drinking my coffee. Just things popping into my head that I want to talk about. So let's do that. Let's set the stage for where we are, what's going on, and what we can expect moving forward. A couple of things here are pretty important. Before I even do that, I want to give a big shout out to the Pharaohs. Okay, I happen to be a Pharaoh, the oldest car club in the world, and my brother Pharaohs are just awesome. My sister Pharaohs are awesome. So with that said, I just wanted to, like I said, give a big shout out to the Pharaohs. Hey, if you are a car enthusiast, maybe you want to look into a local chapter. They're all over the place. And tell them that Greg Mannarino sent you. All right, people, look, with regard to the Pharaohs and everything else, let's get moving. So let's start off with this here. First of all, we got a market, again, that seems literally invincible. Nothing that is getting thrown at this market seems to affect it in any meaningful way. And we all understand the driver here. It's easy money. It's central banks. More specifically, it's the Federal Reserve, who, again, is continuing to buy assets at an epic pace, breaking record after record after record. And this is, again, a system that's been put in place by design to create distortions across the spectrum of asset classes. And I mean that. Let me put another perspective on this for you in case you don't know. I've said this many, many times throughout the years, but I want you to really focus on what I'm about to tell you. The Federal Reserve is, in fact, a serial bubble blower. Meaning, well, let's look back on the history of the markets and everything else. What the Fed does, okay, is they deliberately inflate stock market bubbles, and then they deliberately allow these bubbles to deflate. This cycle of market distortions and bubbles, this is by design. Again, why is that? Again, let's put this into perspective. Who benefits? Who is the prime beneficiary of market distortions and bubbles which correct from time to time, again, by design? Well, it's the major banks, okay? The major banks also run the Federal Reserve, okay? The Federal Reserve is no more federal than Federal freaking Express. Duh, right? I think you all know that. At least I hope you do. Some people actually believe, and I talk to people all the time that are very misinformed, wherever I am, about things. And some people believe that the Federal Reserve is a part of the government. No. The Federal Reserve is a private institution. And I mean, there's no secret here. The major banks run the Fed. That's really the truth. So, of course, you can understand how the system is designed to benefit the major banks. And it'll keep going on that way until like forever here. So with that said, understanding that the Federal Reserve is a serial bubble blower, allowing bubbles to manifest themselves and then bringing these things down, it allows not only just a wealth transfer, okay, from one group of people to another, but it also, again, is a mechanism to keep the banks in power, to keep the banks getting richer and richer and freaking richer. Again, look, it's no secret here. Professional traders, investment banks, they have an inside perspective into the market. I think you would have to agree with that. I mean, the banks, they know what's going to happen before it does, with regard to the Federal Reserve. And so do, well, I wouldn't say all professional traders, but most real professional traders maybe, okay, have a little insider perspective into this market because maybe they talk to everybody. Maybe they know the right people, guys like me. That's how I've been able to keep you all ahead of this market since, well, time immemorial. I tell you things before they happen, and it's just a miracle that they happen. Do you think that's really by chance? Do you think, honestly, look, I'm not right all the time. And even if you do have an insider perspective into the market, things change. But when you have a guy, let's say like myself, who, I don't know, 90% of the time will tell you something before it happens and then it does, you think that's by accident? You think that's by chance? Or do you think it's a possibility that, well, maybe I get a little more information into the way things work than maybe, you know, the non-professional person does? It's the same thing, although to a greater degree, with regard to the major banks, the investment banks, especially because they have a main line running directly to the Federal Reserve. So, understanding that mechanism, that the Fed is a serial bubble blower, like right now, hyperinflating a debt bubble, pulling up the stock market with it, creating distortions across the spectrum of asset classes. We have banks like JP Morgan deliberately in the market, keeping the price of precious metals suppressed, while pretty much everything else is inflating on an incredible scale. I mean, what did we find out just last week from the Bureau of Labor Statistics? The U.S. dollar, on average every month, as of late, is losing 1%, about 1% of its value. You think that's going to stop anytime soon with the Fed running its inflation creation machine at an incredible pace, buying assets like we've never seen before? Again, there was no taper. All the Fed did was lower their monthly targets of asset purchases. There's no cap. They can continue to buy whatever they want to buy. So this taper thing was it's a fallacy. It's not true. It never happened. And with regard to the Federal Reserve raising rates, I'm going to laugh from now until that time happens. Because again, even when the Fed actually does decide to meaningfully raise rates, it's not going to be meaningful at all. The Fed is determined to buy assets. They're going to do that by keeping rates suppressed, creating cash out of thin air, and buy assets at the same time. They're going to continue to funnel dollars around the world. People, I really think this is the biggest secret that no one's talking about. Very few. I think there's one other guy besides me who's talking about this. But the Federal Reserve, you have to understand, believe it or not, what the Federal Reserve says, well, maybe it's just not really true. Imagine my shock. I'm so surprised. No, the Federal Reserve is funneling trillions of dollars around the world to central banks around the world that are buying assets with dollars, not with their currency. Like, for example, Central Bank XYZ has their own currency that they are creating out of thin air, and they, of course, can buy assets with that, and they certainly are. But they're also doing this with the dollars that are being funneled to them by the Federal Reserve. I've explained to you, there is a mechanism going on underneath all this that, again, is getting almost no attention at all. That is, the Federal Reserve is dollarizing the world, not just by creating debt out of thin air, dollars, which is a unit of debt to buy their own assets. They're also doing this. They're creating this cash out of thin air, dispersing this via a digital screen to other central banks who are buying assets with dollars. Central banks are owning and trying to own the world, buying the world. And that's really the mechanism behind all this. And I think most of you are well aware of that. At least I hope you are. Anyway, so the talk last week with regard to this market is kind of an interesting thing, and this is where I was writing some things down. It's about market bubbles, stock market bubble talk. It's kind of everywhere. I mean, it's about time that these freaks are talking about something real, but it's not going to stop the market from doing what it's doing. Higher, record high, record high, record high. Again, suppressed rates here are deliberately creating bubbles and distortions across the spectrum of asset classes. I mean, we have inverse bubbles as well. You know that. Gold, silver are in an inverse bubble. I think cryptocurrencies are in an inverse bubble right now based upon the ever-expanding global debt. You understand? It's not going to stop. It's absolutely out of control. Inflation surging to a 31-year high, and you haven't seen anything yet. See, this is where I think a lot of people kind of lose track of things. When they hear something, let's say from the mainstream media, like, oh, inflation's at a 31-year high and people are hurting, they think it's over. No. In my opinion, and I would believe yours too if you understand the dynamic here, we haven't seen anything yet. Anything at all. Zero. Inflation is going to surge much higher. People, I told all of you from I don't know how many years ago, maybe a decade, that the environment we are in was inevitably going to create the exact situation that we have right now. All these dollars flooding the world, the fact that the Fed keeps issuing dollars in epic amounts, buying debt in epic amounts, funneling dollars around the world in epic amounts. This is by design, okay? And all of these extra bills, in whatever form they exist in, are now starting to chase the same or a lesser amount of goods. Economics 101, okay? And you're seeing inflation surge. But according to Joe Bidenstein, his new policies, whatever he's going to come up with here, it's going to bring prices down. This is one of the biggest lies I think I've ever heard. And they all lie. There are all these president puppets. They don't work for you. We have no representation. You know that. They work for the central banks. And they're all actors. So they say what they're supposed to say, what they're told to say. And I can promise you that Joe Bidenstein, his policies are going to be just as bad as the last guy and the one before that, and it's going to create massive amounts of inflation, okay? They're going to continue to borrow cash out of thin air in epic sums, and it will not stop. They will create reasons, whatever it might be, and try to get the people behind them to spend epic sums of cash, to just borrow it into existence, create programs and situations, whatever they got to do. This is, again, the mechanism, because it's a debt-based economic model that demands that debt be borrowed into existence in greater and greater amounts just to sustain where we are. You understand? So now we have this inflationary environment, and it's going to get much, much, much worse. So expect that to happen here. What else did I write down? With regard to the dollar, I want to talk about the dollar real quick. I always focus on the Dixie. As a matter of fact, I've been focusing on the MMRI a lot as of late. Again, Greg Mannarino, talking to myself about myself in the third person, as usual. That's our go-to indicator. If you are a follower of this blog, if you are someone that has an understanding of the markets and you really want to know what risk is doing at any given time, this is a live, real-time indicator which gauges market risk. Well, look no further, the MMRI. Again, it's right on my website. There is a link in the description of this video. Right now, the MMRI sits at about 93.3. I want to see, in this environment, let me just say this real quick, okay? Just because it's in a low risk, if you look at the MMRI right now, it's about 93.3. That's a low risk. Low risk does not mean no risk, okay? But in this environment where easy money is going to keep pouring in, what do you think is going to happen? You think the market's going to crash tomorrow? Like these freaks keep calling for, some of them month after month after freaking month? People, look. This market is in bubble territory. Actually, no. It's in a hyper bubble territory. It's not going to stop. This is deliberate. Again, the Federal Reserve is going to bring the financial world to its knees. I'm talking about the people at one particular time when they allow this bubble to burst. Again, what is the Federal Reserve? I just told you earlier. They are serial bubble blowers. They inflate these bubbles. They allow the investment banks and professional traders to enrich themselves beyond their wildest imaginations. And then when the bubble bursts, more cash is made faster. That's how markets work. People don't understand that. They think when the market crashes or the market makes a massive correction or something like that, that everyone loses money. How about no? How about people like myself, investment banks, my lions out here? We're going to make more money faster when the market drops than when it goes up. Yeah, but most people don't understand that. They think everyone loses. How about that's absolutely not true? Yeah, sure. Everyone's stuck in an investment plan that only makes cash. When the stock market goes up, they end up being big, fat, ugly losers. But for the professionals, for the investment banks, hedge funds, they love it. They absolutely love it. Let us move forward here, my lovely friends. Going back to the dollar real quick, and the Dixie, which I just alluded to. The dollar here, having a problem with my computer, lovely. You can expect the dollar to continue to lose purchasing power moving forward. Inflation is expected, in my view, to surge much, much higher. Okay, the BLS is telling us that the dollar is losing about 1% per month. It's probably more than that, but that's what they're allowing us to know. Okay, so with that said here, you can expect the relative strength, okay, again, going back to the Dixie, which is the relative strength of the dollar relative to other currencies. You can expect the relative strength of the dollar to probably gain, okay? We're in a currency free fall around the world, and I think you all know that, okay? But the dollar remains the prettiest lady at the ball, okay? That phenomenon is going to remain in place as the relative dollar value stays higher. The dollar will continue to lose purchasing power, but other currencies are going to lose purchasing power faster. You understand? It's a very simple concept. I think I'm outlining it for you, but I think you already know that. A couple of other things before I let you go. I know this video is getting kind of long. People, with regard to energy and crude oil, we are in some kind of a twisted environment. Yes, crude oil has fallen to around $80 a barrel from 85. I told you a while back I expected crude to fall. It did. But they won't allow it to fall in any meaningful way. I told you, they're buying every single dip that comes along here. Crude being the lifeblood of the military-industrial complex, the lifeblood of the market. I believe, again, and I've told you this, I have a $100 target on crude. There are some out here betting it's going to go much higher than that, as high as 300. You get options traders out here. And of course, look, we all know how options work. If you're buying a call option with the strike price of 300, it doesn't necessarily mean that crude has to hit 300, depending on the expiration date that you chose, to make a lot of money here. But the fact of the matter is, there are people out here buying calls with a strike price of $200 and even $300, and some even higher than that. Anyway, I do expect crude to continue to surge higher in this environment here. And again, they will create reasons to keep crude propped up. You all know that. Crude oil is also a phenomenon among itself. And when crude oil falls in price, let's say into the 70s or the 60s or whatever it might be, people die. That's how desperate they are to keep crude propped up. Again, what do you get? Terrorist attacks, refinery fires, U.S. airstrikes in the Middle East. People die when crude oil falls. Again, most people don't realize this, but the U.S. military is, well, in many ways, a slave to the military-industrial complex. Should make sense to you. And because of the petrodollar, the U.S. military is mandated to protect the oil of OPEC nations. Absolutely. Look it up for yourself if you don't believe Greg Mannarino. Most people in the military do not understand that when they sign up, okay, I was one of those guys at one point. You all know that. I was a lieutenant in the Navy. I wasn't really sure of all this at that particular point, but now I know that, in fact, that's the game. The petrodollar is a sinister thing that has vaulted the U.S. dollar to reserve status, and with regard to the nonsense that we see when crude oil falls, well, it's no accident that you see military airstrikes, U.S. backed, that you see terrorist attacks and ships getting wedged in canals and whatever they got to do to keep crude oil here elevated, and I mean vastly elevated. In reality, crude oil has no business here whatsoever. You all know that. It should be, much, much lower than what it is. Anyway, people, look, very long video. I had some other stuff I want to touch on, but this video is almost 20 minutes long. I'm going to let you all go. This guy here loves you a lot. Again, one more time, big shout out to the Pharaohs, okay? I'm out of here, and I'll see you all in of course, it's going to be a lovely morning.